Just for clarity, can you elaborate on what you mean by Main Street? Because you talked about Wall Street and how you didn't really pay attention to Wall Street, but Main Street is really where you spent most of your time. Can you elaborate?
Well, sure. So in the mid '80s, I ended up in the financial services business, became a registered representative. I was out there selling mutual funds and selling paper assets, doing the dollar cost averaging, and buy and hold for the long term and a well diversified portfolio. I bought into all that in 1987, 1986, 1987. Well, I think if you recall, at the end of 1987, we had Black Monday and the stock market crash, and my father lost an eight-figure fortune. And I watched this brilliant man who had founded a company and taken it public in Silicon Valley in one single day lose everything. And I thought, how in the world could a man be so smart and so capable and so disciplined and surrounded by professional advisors and lose everything in a moment? And so I really looked at that and I said, I don't know that Wall Street can be trusted. I don't understand it. And I really started looking at the difference between the way investments worked there. And a lot of it was speculation. You hear all the time, investing 101 is buy low, sell high. I'm here to tell you that's not investing. That's speculation. That's gambling. That there's no value being created. The value in anything is being created by the cash flow. Now, a disciplined value investor like a Warren Buffett. And by the way, how in the world did you get Entrepreneur Magazine to call you the Warren Buffett of lifestyle investing? That's amazing.
Yeah, that was a nice tag. I hope one day to be able to live up to even a fraction of that. But it's a very, very kind I guess, title of an article.
Yeah, I looked that up. I went, wow, that's impressive. But, Warren Buffett is known for being a value investor. He goes out and he looks for companies that sell real products, that generate real profits, that are well managed, that are well positioned against their peers, and that have some upside potential. It's kind of like a value add investor or a value investor, a cash flow investor. I know cash flow is your thing. And there's a big difference between cash flow and equity. And so I was in Silicon Valley in the late 90s in the dot-com boom, and I was watching millionaires being printed daily. We were producing 60 new millionaires every single day in Silicon Valley. And of course, it was showing up in the real estate prices because people could bid these things up to ridiculous levels. Back then, I didn't understand how money made its way from the printing presses and from outside the area through the industries that are there and push down to real estate. I just could see the prices happening and equity happening. And so I really began to try to understand the difference between value and cash flow, which is value, and just appreciation and just speculation. And when you really look at as an investor, if you want to grow real stability, you have to invest in value because that's going to be resilient. And Warren Buffett famously said, when the tide goes out, you get to see who's swimming naked. Well, what does that mean? It means they've bought things that are speculative. They bought things that don't have any legs. They bought things that don't make sense. If you're old enough to remember the Palm Pilot, that stock was trading at 400 times earning. It earned like a penny a share, and it was trading at this like $40 a share. The valuations made no sense. Tesla today, the valuations make no sense. I'm not saying Tesla's not doing a good product or, not generating revenue. I'm not saying that. I'm saying the valuation of the stock relative to what the company is doing is just way out of whack. I mean, it would be like an apartment investor buying an apartment at like 1 basis point. Just ridiculous. It doesn't make any sense. So the amount of rent growth you would have to have that finally make sense is just, it's not real. And people don't understand that. They just think buy low, sell high. No, buy cash flow, buy earnings, buy real businesses producing real products in the real world. And that's Main Street. Now, you can do it as a stock investor, but it's a lot easier for the layperson, if you will, to understand the basic of something as simple as real estate. I'm not smart enough to be Warren Buffett. I can't underwrite a company, a management team, those sophisticated financials, or even really understand the sector and the competitive, pressures that a company faces. I'm not that smart, but I can understand an apartment building or a mobile home park or even a single family home rental.